Welcome to the webinar series. So basically all of you, I think probably you have studied and you were about to face this exam, but unfortunately given the current crisis that the entire world is facing, that we had to stop everything. So institute has taken various measures to ensure that you will continue to study and face the exam. So anyway, this type of problem is part of the life. Actually today, so I am going to talk to you essentially to support you to complete this examination. And those who do not know about me, I am Surang Indunil. I have been lecturing for more than 15 years, especially auditing, corporate governance, risk, etc. So I mean, I am not a full-time lecturer, so I am working in the commercial sector, but lecturing is part of my life. I have been with students for longer period, and I am here to support you to get through your exam. So before I start, all of you know that the time period that I am talking to you, so today is, I think we are just after New Year, 18th April. So as I speak to you, there is a curfew enforced, especially in Colombo. So it was not that easy to come before you today and to deliver this lecture. So there were a lot of obstacles, but we were able to overcome all of that, and institute is committed to support you to complete your examination. So before I start, I want you to have an overview. So I think also this is not an interactive class as such, otherwise you can ask many questions and we can clarify. But I am sure there is a perception that auditing is a difficult subject. So do you think so? And with my experience, there are a lot of, if you look at the students based out there, those who have not completed chartered accountancy, this is a new syllabus and you all are the first batch probably going to do this paper. So before that, over the years, if you take say my experience last 15 years or more, when I was a student, let's say 20 years, the number of students who have been struggling in this subject at various levels, there are many, and still there are many students who have not completed their who have not become chartered accountant because they have got this subject wrong. So therefore, I put that question back to you, is auditing difficult? So what do you think? So answer is a positive answer, it is not difficult. So I am telling you with confidence that it is not difficult. If you take this subject right, it is going to be one of the easiest subjects, and all of you, right, all of you are in a position to pass. Now I would also tell you that all of you, I can't say all, one of you can be the prize winner of this subject. So even this webinar series is pitched at that level. So we are going to basically help you to understand key areas of the syllabus and how to strategically prepare for the examination. So before I straight away get into the paper, I think you can see on the screen what we are discussing today is the pilot paper, right? But I do not want to rush, you know, all of you know there are 50 questions, there are MCQs, and of course I will tell you the art of answering MCQs. They are pretty, so while you know, I mean some people will say MCQ is easy, okay, not that easy. Unless you are very sharp, you may not get it right. So there is art of handling this, and at the end of my presentation, so let me to explain to you our plan today. Basically, one is pilot paper. In my session 1, so I am going to talk to you about the pilot paper, but like I said, I do not simply go through the paper, right. I want to connect paper to the syllabus and then to give you a coverage of key examinable topics, so that you can not only answer pilot paper, you can check whether you are ready for the examination. So therefore, I think I already clarified this, but let me to take you through as a quick introduction. This question that I already asked you, especially subject like auditing, and actually your subject name is not auditing. If you look at the full name, it goes as audit, business process and digitalization, because this is the first level in the syllabus. now when you look at the new syllabus, you can see the first paper under, so audit and assurance is a pillar, right. So, you are here, so that is business process and digitalization subject that we are going to discuss today, and your next level paper is advanced audit and assurance, and you may wonder why there is no paper at strategic level. The reason is that, you know, given the speciality of this subject, this is, if you want to be a chartered accountant, that is another point that I want to explain to you, the importance of this subject, right. Now, let us say once you become a qualified member, let us say, how, I do not ask you, I can't get you answer how old are you, right. Let us assuming you are, let us say at 20 years old or whatever years, saying you want to be a chartered accountant in other, say 2 years, 3 years time, right. When you become a chartered accountant, one of the unique advantage that you have is you can start your own professional practice. You can start your consultancy firm. You would have heard about big 4 firms, and most of you already you must be working in firms, right. So, that is one of the unique advantage. If you look at chartered accountancy with any other professional qualification, this gives you, this subject in particular gives you the ability, right, to understand the business risk controls, and also one day if you wish to be a practitioner to start your own firm, this subject is going to help you. So, that time I actually took for you to understand the importance of this subject, and with that, I mean, given the limited time we have, because we are here, I am telling you confidently, at the end of this session you can probably have the confidence that you will definitely pass this examination. So, what I want before we start this session, right, please make sure you have a blank, say, piece of paper or a small booklet to write some important critical learning points. We are not here to just you know, tick off MCQs, but I am here to take you through difficult areas in the syllabus. Now, this morning, actually, I think although I said I have been lecturing for 15 years, you wouldn't have seen me before, right. I have been lecturing at final levels, advanced audit and assurance, right, and mostly. So, but this morning I spoke to some lecturers, right, to ask, you know, is this subject difficult, right. One of the things they mentioned, some areas are difficult, for example, digitalization, right, artificial intelligence, blockchain, there is a whole lot of IoT stuff in this syllabus. Are those difficult? Nothing is difficult. If you understand the subject, everything is easy. It is a matter of understanding and to be passionate about what you do. If you hate this subject, it is very difficult to get through, right. Do what you love, love what you do. So, this subject is going to offer you, I mean, not only knowledge, but it will really help you in practice. So, now, like I told you, our structure during next probably it will take more than 1 hour, right. So, what I want to discuss is the pilot paper. So, I think all of you would have downloaded the pilot paper, you would have done it, right, but we are going to discuss beyond the pilot paper to connect it to some syllabus learning outcome. So, and you can see, I hope you can see this slide. This is a quick analysis which I just did to see how these questions are connected to syllabus topics, and that also tells you in terms of marks, right. You know, your question has 50 questions, right, and the relative importance of each subject you can understand. If you take corporate governance, there are few questions. Corporate governance is one of the critical subjects in chartered accountants, especially in your last level. There is a paper called Advanced Business Assurance. There you will learn more about corporate governance. There are few questions, right, question number 1 to 4 and question 44. And then what is IC? That is about internal controls. There are a lot of questions relating to internal controls, ethics, auditing, reporting, and last few questions on digitalization, right. Now, even it matters when you do see another thing that I want to explain to you, if you want to pass the examination, right, I would say 3 things matters, right. These 3 are key ingredients. One is you have to be knowledgeable about the subject. If you don't know about the subject, I mean, how can you answer? Now, if there is a question asking what is corporate governance and there are multiple answers and you may vaguely pick one, I think this is the answer, but that may not be the answer. Those students who know corporate governance means this, it is a system by which companies are directed and controlled, you don't need to look at even other answers, straight you answer that question. So, what I want to tell you, one of the important message, now these 50 questions that you are going to answer in the exam, which is 2 hours, you have 60 minutes, right. So, each question, can you take 2 minutes? No. Ideal if you can answer all question in one minute, right, then you have another 10 minutes to check. But what I suggest, one of the strategic approach, if you are a good student with knowledge, there are some questions within 10 seconds you will answer, but there are some questions that requires you to think what is the answer, and for those questions you have to allocate time. Therefore, knowledge really matters. The students who have studied examinable topics, they will answer some question within, within like 10 seconds, 15 seconds, some questions, and then they have a lot of time to look at certain questions which involves numbers, scenarios. You have to really drill down and see what they are. So, therefore, it is very important that you are knowledgeable. And of course, the other element that I described is not usually now applicable in this paper. So, that is the last element called writing, right, because now this is not a writing paper where you answer MCQ, but the second element is very, very important. There are some students, they are knowledgeable, but if a scenario is given to apply this knowledge, they fail. So, application really matters, how to put things into practice. So, knowledge and applications are very important. So, what I explained to you is another techniques. If you look at these MCQs, there are certain questions, if you have learned the relevant theory properly, you can answer very quickly. So, when I discuss with you the paper, so we will see different questions like that. Now, let us start with like I explained to you, the syllabus. This is the overall structure of the syllabus, right. You have corporate governance for 10%, right, then the business control for 25%. So, this is a very important part. Actually, this requires some practical knowledge as well to understand how business works and how controls helps business to be successful. And this is the area some people say difficult area in the syllabus. This is all about digitalization, and ethics is one of the very important subject and very easy if you understand. And you see 40% of your syllabus is about auditing, fundamentals of auditing. So, that is the syllabus structure, right. So, let me to remind you before we get into the paper, secret one, if you want to be successful, ask yourself what question examiner is going to test. I would tell you examiner can't test anything which is not connected to syllabus. Every question should have some connection to syllabus learning outcome. If you are a smart student, the first thing you have to go through is to understand what are the learning outcomes in the syllabus, right. For example, define corporate governance. There are so many definitions you have to remember. There is, say, for example, one prominent definition that you need to understand. So, likewise, if you take now, let us get into the subject after introduction and some kind of motivation for you that this subject is not difficult. So, let us go through one by one. So, the first thing that we are going to discuss, see again I am telling you our structure today is to look at some theory, so that is in terms of knowledge, and then connect it to the syllabus, connect it to the questions in the pilot paper. So, now I want to take you through quickly. Now, for your exam, so remember I mentioned to you, you have to have a book with you now, a blank book probably, right, maybe a few A4 sheets, and 10% of your syllabus you are going to look at now very quickly. So, there are 3 topics under corporate governance, there is no 4th topic. One is the concept of corporate governance itself, do you understand? Secondly, board of directors, third audit committee. So, these are the 3 topics. So, if you are getting ready for the exam, you should know these learning outcomes. For example, what is the definition of corporate governance? If you know that, any questions you can answer easily, right, from this, very straightforward. Second part is to understand principle of good governance. So, there are sub areas like right and responsibilities of owners, investors and so on. And third is all about board of directors of a company and audit committee. Now, I will spend about 15 minutes with you to understand, to give you the essence of corporate governance knowledge, and then after that we will look at the questions, right. So, the first of all, the corporate governance, the first learning outcome, corporate governance definition. And now you can see a picture here, right. So, this is an interesting subject. If you do not understand the subject practically, I mean, it is very difficult for somebody to memorize. See, now for the exam you are memorizing, corporate governance is a system by which companies are directed and controlled. Now, how can you memorize and reproduce? How many things to memorize? Very difficult. So, always go with a logical approach. So, let me to explain to you so that you will never forget corporate governance. So, think, see, when you look at this picture, what do you think? If you are doing a business, it's all about taking risk, right. For example, you see with this pandemic situation now, how the risk business are taking. Some business they are going to close down, some are wondering what to do, and those business which are into digitalization, they are going to be benefited in a big way, right. So, there is a lot of uncertainty. Doing a business means is all about taking risk, right. So, maybe now if I ask you who is this man, maybe the one who is running the business, you can probably say is the CEO. Can a CEO make any decisions which he or she feels? No. There is a governing body to question. Right now, you see in Sri Lanka, there had been several corporate collapses. You would have heard about Golden Key, Pramukha Bank, CIFL, all these companies, right. When things went wrong, people question what was the role of board of directors. Now, for example, if CEO is making a very high risk decision, say CEO is taking company's money out and giving business to his say brother-in-law, now board of director can fire the CEO. If CEO is making a very ineffective and failed decisions, invest in a project that is going to become a total failure, then the board of directors can take action. So, therefore, if I ask you the question, who are the most important party of the governance, you can probably say it is board of directors. Governance is not a new thing. You know, father of economics, Adam Smith, he says, now who are these directors? They are managers of other people's money, not their money. How can you expect them to take care of others' money with the same vigilance? Vigilance means, I mean, they are very keen about their money, but are they keen about others' money? So, there is a question about directors' role, right. Then we have a question, even directors are not governing, if we can't suspect, if we suspect directors. Now, that is where corporate governance has, so in a while I will explain to you diagrammatically. So, what this point is, now there is another set of directors, right. Now, we call executive directors those who are doing the business, and there are non-executive directors as well as outside directors, right. If you look at a company, there are 3 directors, let us say Pereira, Fernando and Sunimal, they are doing the business, and this company also has public funds. Now, if shareholders are to be believed about those 3 directors, right, sometimes they may suspect, are they using our money properly? Then you need some other director, right. Let us say there is another 4th person who is an independent director, who can question that these directors are not doing the right thing. So, what I gave you is a brief introduction. Now, having said that, let us look at the definition of corporate governance. Now, I want you to come with a paper, have a paper, please write down this definition, right. So, any question in your paper relating to first learning outcome, you can probably answer from this definition, right. If I show you define corporate governance, so what is this wonderful definition? This definition, so let me to explain this with some analysis. So, this definition is not that old, it is 92, in 92 in Cadbury reports, Adrian Cadbury came up with definition. So, the definition that you can see, corporate governance is a system, right? It is a system by which companies are directed and controlled. So, I want your attention to two words. So, this system talks about two things: direction. What do you mean by direction of a company? What is your direction? Direction is about future. What do you want to do in future? Right? Direction. Then who are the directors? Why directors are called directors? Because they are directing the company. Right? Say in another 5 years time we want to be number one company in Sri Lanka telecommunication. So, one telecommunication company has that bigger vision. Say one bank, they want to ensure that they want to be number one bank in Sri Lanka, right. So, direction is what do you want to do in future. In 5 years time you want to be market leader, the most respected company. Now, if you are a bank which wants to be most respected company, now there is a bad CEO, right, who is going to ruin this company, then somebody should control that behavior. So, corporate governance brings lot of controls. Now, who is bringing these controls? And that is why I mentioned to you, if business is run by all executive directors means directors who are running the business on a day-to-day basis. A marketing director is deciding that tomorrow we are going to start a new business, I am going to sell to this customer and so on. But under control element, corporate governance requires outside directors to come, especially independent non-executive directors to come and challenge what they do. So, therefore, you would have learned already in your chapters, there are so many committees in corporate governance, right? Audit committee, remuneration committee, nomination committee. If I ask you, all these committees are, who will be, like who is the chairman or majority of members, you will always see they are non-executive directors, right, and we need independent directors to be in this committee, and they question, for example, remuneration committee question whether directors are paid excessively, millions of money, they are not doing a job. So, remuneration committee will question that. Nomination committee will ensure the right directors are there to govern the company. If there is any fraud, right, anything irregular, audit committee will highlight that, question the board of directors. So, this is corporate governance in a nutshell. So, I emphasize you only one thing. What is that? What is the definition of corporate governance? You will never forget now. So, what are the three words? It is a system by which companies are directed and controlled. Remember, this is very powerful definition, which is a famous definition. Of course, there are other definitions as well, but for the purpose of your examination, you can always remember this definition. It is a system by which companies are directed and controlled. Now, that is the first learning point for you. So, I want you to look at your book again. So, I want you to make some notes now. The first thing that you wrote, the definition. Now, let us look at nuts and bolts of corporate governance, right. Now, we are going to look at, see again this is techniques when it comes to study, right. Do not try to memorize things, you take a piece of paper, draw things, right, you ask from yourself, do I understand this? Now, see, I am going to paint a picture of what corporate governance is, right. You will see everything in this one diagram, right, and then that will help you to remember what you learn. Now, this triangle, right, probably you can say this is management. In a company, you have lower level management, middle level management and a CEO, right, at the top senior management. So, their main purpose, you can tell various purpose of business, but say every business they want to make money. I already explained to you, can management run the business in any way they want? No, right. They have to be controlled by, they have to be directed and governed by the board. See, this circle which is superimposed, right, on the triangle is the board. And now, if I put like this, 1, 2, 3, right, then I again put, for the time being I erase CEO, right. So, I have another 3 here. What does it mean to you? Now, these 3 are part of management, but they are directors and they are executive directors, right. For example, CEO may be here, managing director may be here. So, other directors who are not part of the business, but I use this word, remember this word, this is a very important word, oversee, right. Now, when you say oversight, right, oversight, what does it mean? So, oversight is also called mistake, but this oversight is supervisory, checking what is going on, right. So, basically these non-executive directors they are playing a big role in corporate governance, right. Non-executive directors, right. And then as you know, there are, so if I put say another circle to mark, this is a special non-executive director, these 2. Why they are special? Because they have the guts. Let us say they are working in a company and they know that managing director is Robin. He is giving all the business to his private company, the company which is run by his spouse. Now, one of the very senior, now of course, when you are a student, you must know about the business. Now, look at some big companies in Sri Lanka. Who are the non-executive directors, right? Who are the independent directors? Some big names, some are prominent lawyers, right? They are very respected people. If they know in a company the managing director is Robin, the first thing they will do, they will resign. So, tomorrow newspaper will say so and so is resigning. So, that is how corporate governance can become powerful, right. So, therefore, one important thing I am highlighting here, in corporate governance you must know some directors named as independent non-executive directors, independent non-executive directors. Now, please write the second point in your book. Now, you must know the executive non-executive difference. Executive means while they are directors, they are involved in day-to-day running of the business. Whereas non-executive directors, they are not actively involved in the business, they play what role? Oversight role. There are some non-executives, they are independent. So, I am asking you the question, what do you mean by independent directors? Independent, now when you say independent, independent from whom? What is the answer? Do you know the answer? Now, you are wondering now what was in the book, you are thinking what is the answer? That is not the way to study. So, when you look at logically, independent directors means they are independent from this management, they are independent from management, they do not have any connection, relationship. So, I write those words, they do not have relationship, connections, right, and maybe they are not the owners of the company, ownership, right, etc. So, for example, if you are a non-executive director with 20% of shares of a company, you are a shareholder, you are wearing a hat of owner, not as a governing party, right. So, therefore, if you have a share investment, you are not an independent director. Similarly, if you have family relationship, right, say for example, managing director's brother who is a chartered accountant, can he be an independent director? No, there is a family connection. So, like that, there are relationships, some directors are doing business with the company. So, those are there is a separate slide for this, I will show you, but remember logically, if there are relationship, investments, business connections, when I say business connection, director is purchasing from the company, right, and significant fee income getting from the company, is earning millions from the company. So, why that person cannot be an independent director? Because he can't raise his voice at the boardroom. If he raises voice, he is losing his money, right, because other directors will perhaps they want him to go, right. So, then he can't challenge. So, therefore, the definition of independent director means they are independent from management, they do not have any relationship connections which will affect their ability to exercise judgment and question these people. So, then if I draw another circle here, what do you mean by that? Now, there is a board and I would say there is another party to control the board, another person. Now, see, now there is a fight between executive and non-executives at a board meeting. Executive wants to invest in a new hotel, right, the non-executive questions and there is a fight, there is no solution. Now, who is going to interfere and make sure the right decision is made? And remember, that is the role of chairman in corporate governance, right. So, therefore, when you learn corporate governance, some of the important principles that you will learn, there has to be a proper board balance. What is that balance ratio? I am sure you would have learned, okay, how many directors, is it 2, 1/3, all that, you have to remember all those numbers, we will come to that. Say in Sri Lanka, right, how many directors at least, how many, what is the size of non-executive, I will come to that, that is one principle. So, I want you to write down this principle, right. When you learn corporate governance, remember good governance requires 2 people to play this role. Chairman is one person, CEO is another person. If you make one person, it's like one man show, very powerful person doing what person wants. So, CEO chairman split is very important in corporate governance, right. And then you have to have a proper board balance, right, at least 3 directors, 1/3. So, we will come to that numbers. Now, in this case half, right. So, that is good actually. So, should be non-executive and then number of independent directors. So, those are the important things. So, let me to put this, I want to explain few more things to finish this part of the explanation, right. Then after that we will look at what are the questions in the paper, then you will see how easy those questions are, right. So, let me to put the full picture differently now. So, we learn corporate governance like this, right. This is management. So, management wants to make money, right. And now I am putting, see the power base, right. Who can give power to management? Who can challenge? Now, see corporate, when you talk about this party, they are very powerful. They can change the management and you know the answer. They are board of directors, board. And why this is connected to this triangle? Probably they are executive directors, right. Then this part you can see non-executive directors, right, and then there are at least there should be few independent non-executive directors, right. Then if you look at proper corporate governance, of course you can have another level, say in chairman, right, who will control the board. And what I want to tell you, one important thing through corporate governance we learn, remember definition is a system by which companies are directed and controlled. Now, this controlling element that I mentioned to you mostly coming through independent directors, chairman, right. It does not mean the board is not controlling, they do, but they play a bigger role. Now, if I ask you what are the main questions of business, corporate governance has mechanism to address those. What are the problems if you look at, I mentioned few names in Sri Lanka, right. From Pramukha Bank to all of that CIFL recent failures, and around the world there are many, Enron, WorldCom and so on. Now, in all these companies, if you ask question what went wrong, one thing you will notice, the corrupted board, the board, we are not happy with the board, the right people were not there to govern. So, one of the bigger question corporate governance should address is to make sure companies run by competent directors. So, therefore, corporate governance requires to have a separate committee called nomination committee to make sure that the right people will be appointed to the board. There is another issue in many corporate failures, right, that is where directors misuse companies' funds by getting excessive salaries. Directors were paid more than what they were supposed to pay. Now, good governance requires another committee to decide what is the salary, right, executive director should draw. Is it reasonable? Is it consistent with the market? So, that is remuneration committee. So, corporate governance requires a remuneration committee. So, all these committees, if you look at, most of the members should be non-executives. And finally, I would say one of the most powerful committee in corporate governance, which is part of your syllabus, is what committee? I am asking you a question. If something goes wrong in a company, massive fraud, now if you look at, I am sure you would have heard about Enron case, one of the biggest company in the US, one of the biggest audit firm in the world called Arthur Andersen, right, that Arthur Andersen is no more today. Why? Because they audited Enron. So, what happened at Enron? There have a lot of issues. They were cooking the books, right. Now, if I can show you another thing now, if this is power, right. Now, who gives powers to the board? What is this power base? Who are the owners of company? That is shareholders. So, directors, right. Now, while running the company, right, so the management has to provide, right, management and the board collectively, they should provide what? Right information. So, I would write this concept as accountability. Now, do not think this is a very big word, you do not know that, right. What is accountability? What is accounting? Right. Now, this is not accounting, but when you say accountability, directors are answerable, right. We invested in companies 100 million, the directors will say this is how money was spent, and that is your balance sheet, P&L, annual report, all of that. Now, if these numbers are not right, then shareholders are really worried. So, therefore, this committee called audit committee will make sure that the shareholders, right, will see the right numbers, the company will manage their risk, all of that is a part of audit committee's role. So, one big role of audit committee, now I am now drawing audit committee's main role. You can see several questions in these areas later. So, one job of audit committee is to ensure financial statements are right, free of misstatement. They will review the accounts to see whether there are obvious issues, right. Then if I ask you a big question, right. Now, one of the bigger part of your syllabus is internal controls, right. Now, what is the connection between controls and numbers? Simply answer is if controls are weak, the chances that numbers are wrong is high. Now, if there is a company, there is no control over sales. Now, you can sell to anybody, right. Marketeers will decide sell to anybody. Now, what will happen? Now, if there is no control in your accounts, there is a debtor balance, right, but that debtor balance you can't recover. So, if you do not have internal controls, right, now okay, there is a debtor balance, you know, if there is a debtor balance of 100 million which is unlikely to be recovered, you have to make allowance for impairment. Now, in your, you would have traditionally learned as bad debt, so doubtful debt, but in accounting we call impairment. So, we are not going to recover say 80 million. But if there is no control, this company will forget about impairment, let us put 100 million, we will, you know, directors think they can recover. No, that is not right. Internal control will ensure that now your correct debtor is 20 million, this is impaired. If that control is not there, your debtor is wrong, right. So, therefore, now another question I want to ask, if numbers are wrong, if controls are not good, who is going to tell that to the directors? Not directors. Who will inform that issue in a more credible manner? Because see, whatever said and done, shareholders can always question this. There is a CFO here, right, say chartered accountant, but shareholders have still a question whether the CFO can be influenced by the powerful managing director, cook the number, change the number. That is why you have a subject called ethics, right. That is the reason. Who tells the shareholder numbers are right? And that is audit opinion, that is part of your syllabus. So, the most important role of audit committee is to take care of auditors, right. So, I will simply put auditors here. Now, what do I mean by that? Audit committee will ensure what? Auditors are independent, nobody can influence or pressurize the auditors, right. Any decision relating to auditors are not taken by the CEO, right, but audit committee will decide. So, auditors are powerful. So, there are two auditors here within the company, internal auditors and external auditors. Now, see these two pictures if you take can summarize entire corporate governance code, right. So, this is your picture, this is how you should strategically study very quickly. Lengthy notes. So, I have given most explanation. Now, I will quickly take you through some of these and then we will answer questions. So, basically, now I will show you, because I did not show all the text, I just showed you pictures, right. Some of these, now first thing we learn is this definition, I am sure you wrote it down or updated in your short notes. Then then this part is very important. Now, this we studied. You can see I have put a reference number, this is a corporate governance book, but in your study pack also you can find this. Now, to be an independent director, this relationship should not be there, family relationship, right. Now, for example, there is an independent director, he has a family relationship, then he is not an independent director. So, we discussed. Then this one, business relationship. What is business relationship, right? If director is having with the company business relationship, now there is a definition of business relationship. Now, this director is getting an income or benefit from the company, right, that is 10% of annual income, right. So, bigger part of director's income is getting from the company, how can he become a independent director, right. And so, this is business connection, right. Actually, in this business connection, if you look at this is not now directly with the company or related company, right. So, because if you look at a larger group, there are subsidiaries, all that. But for your level, you can simply remember if a director is earning significant money from the company or having any business connections, right. So, that director is not an independent director, family relationship. Now, can an employee of a company be a director? No way, right. Employee of a company cannot be an independent director. And then there is another point here, when a director has served a company more than 9 years, he will not be an independent director. So, this point is very important. A shareholder cannot be an independent director, even there is a threshold more than 5% of shares, and cross directorship, meaning you are executive director, you are independent director of company A, but in company B, right, sorry, let us say you are an independent director of company A, right, but in company B, you are an executive director with other executive directors of company A who are in company B. I know you did not understand this, but you know this type of things will not be tested in a big way in your syllabus, but simply what I wanted to say, cross directorship, there are two companies, company A and B. In company A, let us say Pereira, right, he is a non-executive directors, independent non-executive directors, fine. Now, let us say there is a person called Saman. Saman is an executive director. Now, same executive director is there in company B also, Saman is here also as executive director. Now, this Pereira comes here, now he sits in the board as executive director. Now, he is where now here executive director means doing the business. Now, you are losing your independence because you are holding a cross directorship in another company with the same directors of company A. So, that is that point, that last point. So, now I mean your exam is not, you know, they will ask very easy question, not very tough question in these areas, we will look at it. So, this point is about independent director, and then we discuss board balance in Sri Lanka, how many non-executive directors should be there. So, now what the book says, right, at least 3 directors, please write in your book, now you can draw this again, right, 3 directors should be 3 or 1/3, right, remember this number 3 or 1/3, whichever is higher. But there is one rule, now I explained to you in my analysis, if CEO and chairman is the same, they are the same, that is not a good sign. In case CEO and chairman they are the same, there is one person, then majority of the board should be non-executive. And there is a new thing in latest corporate governance code, right. I will read it again, chairman and CEO is the same, or the chairman is not independent. Right, let us say chairman is not independent means chairman can be a family member, right, or chairman is like acting like a managing director, then he is not a independent party. So, in that case in Sri Lanka it requires a majority of the board should be non-executive, right, with the SID. Now, this is not police SID, right, what is SID? Senior independent director, right. So, this is another thing that I want you to learn. And in terms of theory or the knowledge, that is all. Now, we have learned enough theory to answer any question. Now, having learned this, if you say questions are difficult, there is something wrong. So, let us get into the pilot paper and see because I have analyzed the paper to make a best use of our time, and now even I can show you, I think I showed you this breakdown of questions in your paper, especially this. You see this question number 1, 4, 44, they are from corporate governance. Let us see whether we can answer this question now. And if I open your pilot paper, okay, now so having looked at corporate governance theory, let us see answer in pilot paper. So I want to remind you that finally, however much you are knowledgeable, right, what matters in an examination, how well you answer during the time. So it is something to do with time pressure, right. But I am telling you, don't take any pressure when you are doing exam. If you are under pressure, whatever job you do when you are under pressure, you can't do it successfully. You take a cricket match, right, however much talented player, if the player were to come in the last over, right, you can see some will really struggle. But if you can cope with this pressure, when I say that, say don't take any pressure, just do the paper, sometimes you will end up getting 100 out of 100, provided you are a knowledgeable student. So therefore, I want to remind you that when you face the exam, forget about the pressure, that is one tip. And the other tip that I want to tell you is the time, right, how to answer in 2 hours. I told you some questions you will answer in 10 seconds. Why? Because you are so knowledgeable. Now you can see the first question, corporate governance is what? Right, the first question in this paper, corporate governance is best described. So what is it? That is the definition, right, what is the best explanation. Now if I were you doing this paper, my eye only goes to answer C. I do not care about others because I am absolutely sure about it. That is the world famous definition, system by which companies are directed and control the answer, right. So this is the answer. So that is how you see how long it takes, few seconds. Question number 1. Question 2, which and also remember we have to read the question carefully, because some are says is and some are says not, that is very important, right. Now in this case, which of the following is not a duty or responsibility of audit committee? Now I explained to you in my diagram, which you saw earlier, what is the role of an audit committee, right. So I wrote 3 things, if you remember. One is their role to ensure the numbers are right, the financial statement. Now is it there as a part of answer? Yes. B, review significant financial reporting judgment. Now for example, you know nowadays there are a lot of complicated accounting, right, fair valuation, you are learning some of these, right. Say fair valuation of investment property, now discounting rate, and now this involves lot of judgment, assumption. Now if this assumption is changing, the number will be changed significantly, right. So then this is a part of what I am saying is financial statement role is a part of that. I mentioned to you 3 things, one is financial statement, internal controls, and taking care of auditors, right. So basically in this question we have to answer what is not a duty of an audit committee. So review and monitor external auditors' independent and objectivity, whether auditors are actually independent, they have no connection with the management, yes, it is their responsibility. Review significant accounting judgment, yes, it is their responsibility. Now see, if you are a smart student, C is an odd answer. Be responsible. Now see, again if you are a good smart student, you would probably see, I mentioned to you audit committee has non-executive directors, can they be responsible for business, any business decisions, right. Remember, it is very difficult to make them responsible, but they are supervising, overseeing, reviewing. These are best word, you know, reviewing, things like that, right. Now when you say be responsible for reappointment of external auditor, that is odd answers, right. So probably that is not correct. So, which means that is the answer, right. Then what is meant by, I will also for your knowledge cover D answer, right. Whistleblower means who? Blowing the whistle in a company. If something is not going well, there is a fraud, CEO is taking company's money, and somebody can communicate this through an email or a phone call to a audit committee, right. So, then audit committee will protect that somebody, that's called assuring confidentiality, right. So, then what is the odd answer? Probably B, right, the answer, okay. Right. So, then if you look at third question, that is independent directors we discussed, right. Which of the following would impair the independence of non-executive directors, right. Now, we know they can't be a significant shareholder. Which of the following would impair? So, A, one will impair. Serving longer time for 9 years, yes, that will impair, right. And employment with the company in the 2 years preceding the appointment, yes. Then the last one, close family ties with significant shareholders, right. Now, out of these 3 answers, out of these 4, so what is the correct answer, right. Now, we know 1, 2, 3, right. So, they are the correct answers. So, which is C, right, because if you look at the fourth one, what it says, close family ties with significant shareholder, but what we learn is family relationship with the management, but this is shareholders. So, that is the answer. Then if you go to question number 4, this question, which of the following are included as responsibilities of directors in respect of management and internal control in Corporate Governance Code 2017. Now, this, before I get into these answers, I want to clarify, right. Now, if you remember, if you go back to my diagram explaining corporate governance, now because this question is about board of directors, right. Now, there is something called internal controls here, so I circle that. And as board of directors, remember they are always accountable for shareholders, right. And if you ask who should ensure company has, remember my example of debtors, company, there are a lot of bad debts, doubtful debts, the impairment has to come, right. Who will ensure that there is a process of impairment, process of that you are selling to the right customer to reduce the credit risk, those are controls, right. So, in a company, who should ensure that controls are working? So, that is board of directors responsibility, right. On behalf of the board, audit committees help in that, but remember always while there are committees, always the most responsibilities comes with board of directors collectively, this entire board, right. So, when it comes to internal controls, there is another word that goes with internal control, that is risk management. I want you to remember this word. Take my same example. If you are in a company, let us say you are selling food items to supermarkets, right, not supermarket, let us say other normal shops, and now there are few customers, right, they are not, you can't collect money, so you have failed. Now, what is the risk we are talking? Credit risk, ability to collect money. So, credit risk has to be managed. So, we use these words together, risk management and internal control. So, board has 2 roles. They have to ensure that this is in place. This, when I say in place, what? Risk management and internal control. Now, that has to be there, which means in a company, before you sell to a new customer, evaluate whether this customer is good, go and visit and look at the accounts and so on. Secondly, we have to ensure that this is working, right, operating effectively. Operating effectively means for every customer this is happening. Now, these are the 2 roles of the board when it comes to internal control. With that knowledge, if you look at the answer for this question now, what is director's role? Now, you can read these answers. So, what do you think, what is the right answer? And again, a smart student, I will give you some tips. In auditing, whenever you see this word absolute assurance, that answer is usually wrong. Remember, in this subject, whenever assurance comes, right, from auditor's point of view or directors, it is very unlikely we give absolute, means like a guarantee, 100% sure, very difficult. So, then this is not, I am not even reading this, right. Now, somebody is providing absolute assurance, difficult, right. Then if you look at the second answer, the board of directors should have a process of risk. Now, you see the word risk and control to safeguard the investment of shareholders and the company's assets, right. That seems to be correct, yes. Then the third answer, board should review the risk management system and design the operating effectiveness. Check whether it is working, yeah, looks like that is also correct, right. The board should review annually whether company requires an internal audit, right. So, now we have to answer which of the following are included as responsibilities of board of directors. So, what is the correct answer for question number 4? So, what do you think, what is the correct answer? As we know, this is wrong, right. Then the board should have a process of risk management. So, these 2 and 3, right, are the correct answers. Then if you look at, so now we have actually, see, I have taken some time to explain to you corporate governance because it is a big subject. That is why I told you at final level there is a separate section, advanced and advanced business reporting. Now, this knowledge will be very useful. Now, for your level there is no high weightage on corporate governance. Now, it is the time for us to look at another section of the syllabus. Now, if you look at this question number 5 talks about GRN in, 6 talks about internal controls, right, then about delivery notes. Now, all these questions seems to be controls relating to questions relating to internal controls, right. Up to question number, you can see this flow in a paper, right. Even question number 12 talks about purchase requisition, things like that. The question number 13 CAT, computer aided audit techniques, 15 again controls, 14 controls, 15, yeah, up to question number 14. So, there are questions on internal controls. So, let me to go back to our theory to get some knowledge about a bigger part of the syllabus. Now, if I go back to my presentation, this is your syllabus, right. Now, we learn this 10%, I mean, I am sure I have given a fair coverage. Now, this is a big part of the syllabus, 25, right, other than auditing, this is the second big part. The business processes and controls. So, let me to give you some context to this section in the syllabus, right. Now, what I want to tell you, I am sure you would have read your study pack. Now, this is a heavy area in your study pack, right, and I am sure some of you may find this as a difficult area, but again I am telling you, if you understand logically, these are not, any of these topics are not difficult. So, I will take one area and explain to you. So, in your book, all these are sub processes of a business. If you are doing a business, you have to procure, you have to pay for employees, manage in cash, manage in assets, inventory, sales, and generally this 2.7 and 8 about internal controls. So, these are topics in your syllabus. Now, I want to tell you one thing in common in all these areas, right, is to look at 3 things. In any of these processes, you have to look at what are the activities that take place. So, for example, procurement, what are the activities involved, right? Then what are the documents? Now, if I ask you a question, let us say in a company, so you are working in a manufacturing company, you are the procurement manager, you want to order some items, let us say you are a manufacturing company, you want to order certain chemical items, right? Now, what is the process of ordering? Now, if you need chemicals, say you are the, now let us take, I think I have a scenario to illustrate. So, I will take that scenario and explain to you what activity means, what is happening. I am raising my requisition, I want to order, it goes to purchase department, they raise an order, right, and then it is sent to supplier and so on. So, there are series of documents, right, purchase requisitions, purchase order, GRN. Then we have to ask the question, what can go wrong? That is called risk. What can happen? What can go wrong? Now, if you look at this slide, now this P2P, we call P2P, right, procurement to pay end to end, right. You start with a requisition, end with a payment. Now, what are the steps? We have to identify. In my example, we need to purchase chemicals, right. So, in a supermarket they want to make a decisions. Now, we want to purchase some particular unique product. There are only few suppliers in Sri Lanka. Let us say some, if you take some items which are not common in a supermarket, right. Say for example, any food item, right, vegetable. Now, say some item made for vegetarians, let us say something like tofu. Now, there are only few customers, few suppliers in Sri Lanka, right. Now, if as a company, right, they decide, okay, we have to buy, right. Now, then this is the quantity we have to buy. Now, I can't, if I am going to order, I am a person in charge of one vegetable section, I can't decide whom to buy. So, that requisition has to be approved. Now, you see these words like approval, all these are part of controls, right. Then the goods comes, right, sorry, before goods comes, we have to send a purchase order. We order X amount of quantity, and that order also to be approved and go in to the supplier and send in goods, right, and then the invoice comes, payment. So, now this is very boring diagram, you see the steps, but let us I will explain to you through a dynamic example, right, here. Now, say this man who wants to order, right, and now the parties, he can't just order, he is a one manager of a company, right. He is not in the purchasing department, he has to go through the purchasing department, and then the goods has to come to warehouse, supplier has to send the goods, and finance department has to make the payment. Now, in this case, like I mentioned to you, if I am in a department as a user, let us say I am working in an education institution, you can say chartered institute, they want to order some computers, right. Now, then there has to be a requisition, right, which will go to procurement department, and they will evaluate whether we should buy or not, from whom to buy, all that, right. So, see this requisition process is important. Then the purchasing department will tell, okay, there are now sometimes there are multiple requisition comes, marketing department wants computers, another department wants, 3 department wants, they will raise one PO, right, to purchase computers, let us say. Then it goes to a supplier, right. And I think let us not take the example of computer, let us take the example of items, which contains, large volume that you have to count and take. You can take any example, let us say stationaries, say A4 bundles, we are ordering X number of bundles, right, coming in many boxes, this is an education institute. So, if that is the case, so the supplier send in goods, it will go to the warehouse, right. Now, this is the typical process, and supplier also send in an invoice, and on receiving goods, warehouse has to raise a GR, and then only it goes to the accounts, it has to come to inventory, right. Now, this what I am trying to explain to you, these are activities, right, all of you can understand, but now I will ask you one big question, right. In many companies, there are frauds, if you do not know, in the area of procurement. So, how things can go wrong, right? There are commissions, bribes, kickbacks, that is one part. We are getting supply from, let us say you want to buy some spare parts item in a manufacturing company. So, this without following a tender procedure, the order goes to managing director's friend, and they are producing very bad inferior quality items. So, wrong supplier, getting the goods from wrong supplier is a risk, right, that is one risk. Now, I want you to think what can go wrong where in this diagram, right. Before I explain to you risk one by one, let us start with a very obvious risk, right. What is the obvious risk? Let us say we want to buy, very simple example, right, 100 packs of say 1000 packs of A4 bundles, the purchase order went, right, through the system. Now, finance department has to ensure that they will make the payment only for the right quantity. So, I want to ask you one question, if finance wants to make any any payment, what is the key control? Out of this document, 3 documents matters. One is there a genuine purchase order which is approved, the PO, right. So, we want to order 1000 boxes, right. Have you received all thousands and are those in good quantity, that is GRN, right. And remember, when companies send a PO, even a price is mentioned, because usually you take quotations and ensure we buy one bundle at this price, let us say 500 rupees, and supplier has to invoice at 500 the same quantity. If there is a mismatch, you cannot make the payment. So, what is the main control? This control is in finance, is a famous control. If you ask from any CFO, what is the main control over payment, they would probably say we have a 3-way matching process. I want you to write in your book now, you are learning P2P cycle, one of the main control to ensure payment is right is what? 3-way matching, matching 3 documents, PO, GRN, invoice. So, you can always ask me why PR is not important. No, it is important, but at the payment point you can't start checking all the documents. No. Now, if I ask you a question, if you are in the procurement department, what is the right control for you to ensure you will only order required item? Then you have to check every purchase order has a requisition which is approved. So, that is how control comes. The other point I want to explain to you, risk. What can go wrong in this process? Risk number 1. Actually, I should put one risk here, I have not put that, right. The main risk is you buy from items from a supplier who is not reliable, right, wrong supplier, producing spare parts, you are buying a very critical spare parts in a machine, in a manufacturing plant, after plugging that spare part, the machine stops working, right. So, the supplier is not a healthy supplier. So, then control is to have supply selection process, you can get a third party reference, ask from another company whether this supply is good. Then other risk, now the purchase requisition, somebody can buy things which are not required if you do not approve the purchase requisition, therefore, approval is a control, right. And then another risk, if I ask you, when you send the purchase order, right, you got a quotation to buy A4 bundle at 500, but you simply write instead of 500, 600, right, and tell supplier I am sending order at 600, please give me the balance 100 to my bank account, that is how fraud can happen, right. So, there is a risk of PO going at a wrong price, and what is the risk at GRN? So, you order only 1000, but sorry, you order 1000, you receive only 750. Right, 250 bundles are missing. This can happen very well. I mentioned to you, we are working in commercial organization, we always see frauds taking place. Can you mention any company without a fraud? Very difficult. So, therefore, it is very important at the time of receiving to make sure you have received what is ordered. So, PO, GRN check and check in with the packing list, count in goods, check in the quality, all those are controls, right. And finally, 3-way matching control. Now, through this scenario, I explained to you practically. Now, if you connect theory to this slide, I want you to write something. Go to your syllabus, maybe I do not know, I can't count the number of pages in your study pack, about 200 pages, you have this topic. What? Activity, we know what are the activities now, requisition, ordering, GRN, we know the documents, we know the risk. That is the same thing you have to learn for all these topics, right. So, I want to now connect this to some of the theories in control, so that you are able to answer, another set of questions from this area of internal controls, right. Now, what is our big topic now is internal controls, right. So, what is internal control? So, I want to first I will go to the definition of internal control. Now, see, this is taken from your study text and chapter 2, page number 28. Now, do you know this? Remember, we learned the definition of corporate governance. So, like that, I want you to now understand the definition of internal control. So, what is the definition, right? So, again, wrong approach is to memorize definition. There is nothing to memorize, right? I want you to, so I will take this example to demonstrate to you few key areas in internal controls, which you can see in these slides, and then I will get back to the paper, right. So, let us take, I want to demonstrate. So, basically what I am going to do is to enable you to remember logically these definitions and then to know some of the theories and then we can go to answer relevant questions. Right, book, internal control definitions, right. Now, let us read, assuming we do not really know what this definition is, just try to read and see what is there. Internal control, now this word process and see this word reasonable assurance. Now, what is reason? I earlier told you we do not use the word absolute assurance, it is like a guarantee. Reasonable means, you know, fairly, mostly okay, right. Now, reasonable assurance is not a guarantee, but high level of assurance, right. High level of assurance about what? Company's objectives are achieved. So, internal control is something connected to the objective, right. And these objectives they have classified under 3. One is efficiency and effectiveness of 3 things. Company's operations are effective and efficient, and then the numbers in the accounts are reliable and they comply with laws. So, let me to take an example. We will use the same P2P cycle and I am also going to draw something in this explanation, right. Now, I put 3 things here. And I put probably 5 things here. And here I am telling that, you know, these are you can say in a company these are the department, or you can say in a larger business these are separate subsidiaries which we call strategic business units, so separate company, department, whatever you want to say. But on the top, this is what you want to achieve, objective. As a company, what are the objectives? So, internal controls always helps to achieve objective. Again, before now this is a model that I am going to explain. Before that, we will take a simple example, right. If you take my early example of purchasing goods in a company, right, you want to purchase in a manufacturing company spare parts. Now, to do your operation, right. So, I write the word operation. So, operation means the company has to work, machine has to run. So, in case of operation, right. Now, what is my objective if I am purchasing? So, if I am purchasing, my objective is to buy at the lowest price, the right quality, right. These are my objective, right. Now, right quality, now you know I do not want to explain in detail these 2 words, efficiency and effectiveness. Effectiveness means I get the right quality, my machines are running, the objective is achieved. Efficiency means I can't buy, you know, so many spare parts and keep in a room without using, that is inefficient. Now, every business wants to achieve the effectiveness, the quality, right, the achieving objectives, machines are working. And then machines are not idling, spare parts are not idling. So, use these 2 words, remember, effectiveness and efficiency, right. And regarding 3 things, so what are the 3 things? One is operations. So, I write here operations, one objective is operations. Then the other one which is there in the definition is reporting, right. So, what reporting? If you look at the definition, reasonable assurance, right. When you look at the definition, I again show you these keywords, right. Now, these 2 words we learn, effectiveness, efficiency of 3 things, operations, reliability of reporting and compliance. So, these 2, reporting, reliability of reporting means your numbers are right, that is financial statements. You have to have control to ensure you are showing right numbers to shareholders, right. And finally, you can't violate law when you purchase, right. For example, if you engage in drug trafficking or bribery and things like that, you are violating law. So, internal controls are usually designed broadly to these 3, but you can obviously have some other connected objectives. Now, purpose of internal control system is to ensure, now remember those, now see I am enabling you to remember this definition logically. 2 words, effectiveness, that is you are going to achieve your objectives, your company is running, achieving objectives, and you are not wasting resources, that is efficiency. Efficiency is all about, you know, input output ratio, not wasting things. Effectiveness and efficiency of operation, reporting, right, reliability of reporting and compliance. So, if you have internal controls, these 5, right, it is going to provide what assurance? Reasonable assurance. Now, again you will not forget this definition. If you remember definition now, internal controls provide a reasonable assurance regarding the effectiveness and efficiency, right, of objectives relating to operation, reliability of performance, reliability of reporting and compliance. So, what are the controls, right? So, again this is a very important part that I am going to cover, explain to you. You can see now maybe my diagram, you are wondering what is this, right? Now, if you look at the presentation, so have you seen this diagram? Some have seen, what is this cube? Now, this is a world famous internal control model called COSO framework, and in your syllabus you have seen in your book these elements. Oh, there is something called control environment, risk assessment, control activities, information and communication, monitoring. There are 5 things. Putting these 5 together, right, they are called internal control system, the definition that we learn, and they are applied to different divisions of the company. Finally, if you have a system, it will achieve these 3 objectives: operations, reporting and compliance. So, this is a big part of your syllabus, and many students usually they do not properly understand these things, right. Now, you are learning a big thing, and I am sure any questions you can answer. Now, the part that I did not cover is the meaning of these 5. So, let me to quickly explain these 5, then we can go back to some examples and again our model paper. So, I will complete my explanation giving you a little more explanation about these 5 elements. So, on the top of these 5, what we have is control environment, extremely important concept in auditing as well as in governance. So, I put as control environment, and I want you to write in your book this famous word, right, control environment. If you want in 1 or 2 words, you can say it is tone at the top. What do you mean by tone at the top? Then what is at the bottom? In a company, tone at the top means who set the direction. If the top person is telling others to go, well, you know that Kakulwa story, right? Now, the main man, managing director, is robbing and doing all illegal stuff and telling, you know, you all have to behave properly. So, how can that happen? The leaders of the business, they have to set the right example, right? They will never do unethical things. They will hire qualified people, right? Pay their suppliers on time. Pay their taxes on time. They do not cheat regulators. Now, tone at the top, then I will ask you about whom, right? Tone at the top means whom we are talking about. I will ask you that question, is it about board or management? So, obviously, it is about board of directors, right? But it also covers management, but remember bigger part is board and senior management. Whether board and management think controls are important to them or not. So, if you walk to a company, that company they are very serious, right? You can't just make a payment, there is a process, accountant has to approve it. But there are some companies, you know, when it comes to, let us say sales, you sell anybody and collect money. So, marketeers can sell to anybody, right? In that company, you know, controls are, directors are not giving. You take a very simple example, why some companies they do not want to recruit a qualified accountant. They think why pay for accountant, what is the benefit? Those, they do not know the value of accountant in creating, in building internal control systems. Whereas there are some companies, they are spending a lot of monies on recruiting brilliant people for CFOs, internal auditors, risk management, data analytics, because they want controls, because if you have controls only, you can achieve these objectives of the business. So, in summary, what is control environment? That is whether board and management, are they serious about internal control business? Then what is the business of control? Always control start with risk. Without risk, no control, right? What to control if you do not have a risk? So, one of the risks you will face is, are you going to pass the exam in the next attempt? If that is the risk, how are you going to control? Now, I explained to you that P2P example, what is the risk? We are going to, we are not going to get ordered items, right? Now, let us say I take the same example, we are purchasing spare parts. The manufacturing company needs high quality spare parts, otherwise machines will not work. What is the risk? One of the risks would be, right, we will purchase spare parts from a supplier who is not the right supplier, right. So, if we identify this risk, risk of purchasing inferior spare parts, then you have to have a control to mitigate that risk. So, this is very important to have policies and procedures, right, that prevent you, that control this risk. So, those are control activities. Now, you may wonder what do you mean by control activities? Actually, when you learn, now in my previous example, we found that there is a requisition, there is a approval, somebody is checking, there are two people to check, one is raising a requisition, another part is approving it. Now, if I ask you this question, in company, why are they having so many people in purchasing department? Can't we have one person who is raising the purchase requisition, who is ordering, right, who is also receiving the goods and making the payment? Then this person can do anything. That is why one of the golden control activities, so I would say this is like a fundamental, is SOD. Any guess, right? I can't ask you interactively, get an answer from you. What is SOD? 4-eye principle. You can't have 2 eyes, you have to have 4 eyes, right? Then there is another set of eyes looking whether you are doing the right thing. So, although say I am going to manipulate this, somebody is going to inflate the price we have to buy is 100, somebody is putting 150. When this goes to another person who is checking the PO, he will detect, now we can't buy this at 150. That is called SOD, segregation of duty. So, there is activities done by one party, critical activities to be checked by another party. So, that is a very important control, segregation of duty. Then very often we have this as a control, authorization, somebody has to authorize the purchase orders, right. Then various reports which are reviewed to ensure there is no risk. For example, stock reports are checked to ensure all stocks are movable, that is called business performance review. I am telling you, usually students do not know these things well, these areas, right. These are very important technical points in auditing, right. Business performance review means various reports management is reviewing to ensure that business will achieve again this objective, right. Then we have another important control called information processing, because today's context nothing is happening manually, everything is processed through computers. So, I am not writing the full words, so information processing here. So, when you say information processing, in my previous example, when you raise a purchase order in the system, right, when you select the item, we want to order this particular spare part 001, right, system automatically captures the price which is entered in the system. Price we have to buy at 1,500 rupees, 1 unit of the spare parts. The price is automatically generated and nobody can change this price. So, this is a system control, right. So, purchase order is always raised at 1,500. And when the GRN comes, there is another system control, you can't receive more than 1,500, right. So, all these controls are called information processing, right. So, I explained to you types of control activities, SOD, authorization. The last one which is again important, especially when you have valuable items, you know, you have valuable spare parts in the store is open, right. So, that is where we need physical controls. So, these are the types of controls that you should be aware, right. So, now this slide shows you what I explained to you in terms of types of controls, right. So, there is only last point that I want to explain to you before we get into the questions. We can answer many questions using these theories because these theories relate to any processes, while I took P2P as an example. So, the next point that I want to explain to you is this one. How do you measure, gauge the strength of a control, right, strength of a control. Now, what you see in this slide is a lock, right. Now, think control as a lock, and I want you to imagine, take my example, in a factory you have highly valuable spare parts. See, these are in dollars, there are small gadgets and they cost about, you know, maybe about more than 50,000 rupees. Now, we are talking about controls, physical controls, right. Now, all these items are stored in a location. Now, if we want basic physical control, what do we want? What do we want? We want at least the warehouse to be locked. So, that is called design effectiveness of a control. Now, what is meant by design effectiveness of a control? You have a control can handle the risk. What is the risk? Somebody will come and take the spare part. So, what is the control? The door has to be locked. The fact that door has to be locked, yes, good, control is design. But the problem is, if somebody go and check, the door is open, the lock is there, but it is unlocked. So, that is control is there, but not implemented. So, then it is failing. The last one is, we have to ensure, right, when you go and check today, door is closed, but tomorrow again door is open, which means control is not working properly throughout the period. So, the emphasis on the third point is control to operate throughout the period. So, what the takeaway point from this to you, because in my balance last part of my lecture I will also cover auditing. Remember, before auditing anything, the first thing auditor will test is the control, right. If you test whether control is implemented, the door is locked and it is locked in few days, you check not only one day control is working, then auditor is happy, right. Auditor will do very limited but substantive procedure. So, I also explained to you through this slide, please write in your note, test of control, right. What audit is testing? Whether control has designed properly, control is effective in design. We always use this word effectiveness. Please write the word effectiveness in design. Implementation, meaning when you check that day it is implemented. Operating effectiveness means throughout the period it is implemented. So, these are very important concepts. In gathering audit evidence, the first thing auditor will look at is control, right. So, with that, now we I think we can go back to the paper, pilot paper again, and answer more questions, right. So, where did we stop? So, basically if you look at the balance part, now having spent some time to understand the basic of controls, basic knowledge, as well as my example on P2P, we will answer this question. Let us see whether you can handle this question. Which of the following documents should be matched with each other when making a payment? Now, obviously one thing should come to your mind. What matching? Three-way matching. See those three, where is the answer, right. If you look at purchase order, now which one has those three? Purchase order, invoice and the requisition. There is no GRN, right. Here A, supply invoice, purchase requisition, GRN, purchase requisition, PO and GRN, purchase order, invoice and requisition, D, invoice, order and GRN. So, this is the answer, right. This is three-way matching. We already learned in depth. And next one, the one that I explained to you, internal control definition. Now, like if you know the subject very quickly, you can see the answer, right. Now, see this word reasonable assurance about the achievement of objective regarding operational effectiveness. I think it should be operative, right, operation effectiveness, reliability of reporting, and you do not need to read even other answers. Now, that is the power of knowledge. Then question number 7. This is again a scenario, right. Let us see logically, because this some of this question also requires common sense, right. Issue note, now we are coming from purchasing to sales. Now, in a sale like purchases, when goods are going out, there is a gate pass, you know, there is a gate pass to be raised, goods are now going out, right. A gate pass is raised for sale and then checked with the custom order and the packing list. Now, see there is a quantity. Now, you can use even my same example, there is some quantities of stationeries which is going out, but somebody in that company, right, they want to check this is from seller's point of view. Now, what is going out, is it matching with the order, right, what is going out, is it matching with the order and the packing list. So, what does it mean? What is our purpose of matching this? Remember, right, delivery note is usually quantity note. So, you are matching that with the order. So, which risk that it will address? Risk of selling products at a price. Oh, I mean there is no price focus, right, because you are checking essentially the quantity delivery note. So, what is the correct answer? Then obviously, you can see B likely to be the answer, but better read balance. Is it to check the delay? No, right. Is it about damaged good? Risk of supplying damaged goods? Probably no, right. Then what is our main purpose? We are talking about delivery, whether there is excess or shortage. Are we delivering the right quantity? So, B, right. Then if you look at question number 8, right, why it is important to reconcile. Now, see if I go back to my presentation, I think I do not need to go back again. You remember I mentioned to you 3-way matching control, right, finance department check, PO, GRN and invoice. Now, what is the supplier reconciliation, right? If you have a credit card, you get a credit card statement, and let us say you also have documented the things you purchased. By looking at credit card balance, you are surprised, some items you have not purchased is appearing in the credit card statement. So, likewise, you know, in case while company is having their GRN, if they have missed out anything, but supply has recorded, it is very important to reconcile our balance with supply balance. So, please write, this is a very important control, because I want you to learn through this session, through P2P. Another learning point is supply statement reconciliation. The main purpose is to check suppliers balance with our ledger and see any discrepancy. If that is the explanation, you know answer is D. Identify discrepancy between payable ledger and the supply ledger, right. So, now see if you know the subject, the answers are very easy. This is how you can save time when you answer multiple question while you are knowledgeable about the subject, right. Then if you go to another question which is from payroll, right. Now, we are going to different controls, right. To prevent another process, to prevent a non-existent employee being added to employee master file in order to pay him fraudulently, right. The master file should be checked again. Now, first of all, you have to understand the background. Now, in a company, let us say the company has 1000 employees, you have to process their payroll at the end of the month. Now, out of these 1000 employees, imagine there are 10 employees who are not working in the company. So, how do we know whether they are working? Which document matters? Very easy, right? What document says employees are working? Appointment letter. So, answer is C. Then if you look at, so I do not take lot of time on those type of questions, but when you know some of the things we discuss here will help you to answer any paper, right, not only this paper. Question number 10. If you look at that question, what is the topic? Their topic is internal audit. Tharu PLC, right, has been in business for you know retail trade, and they have 50 outlets and brand name is all that background information, right, Western Food City. Management is keen to increase the range of assignments that internal audit. Now, see the job of an internal audit of a company is to undertake various jobs. Remember, if you for your knowledge, internal auditors usually check, there is no any limit on what internal auditor check, but essentially internal auditors should cover, right, financial controls, right, financial reporting and value for money, right, various operational controls, KPIs. So, there is a whole I mean huge area of role that internal auditors can play, but when it comes to this question we need to see which of the following assignment could internal auditor be asked to perform by the management, right. So, let us see this question. Sometimes you may find, I am broadly explaining to you this answer, you may find the answer given here also you can actually from your knowledge if you really look at you may challenge. So, this question I am explaining to you broadly what are the possible answers, right. One, can internal audit assist external auditor to prepare bank confirmation letters? Yeah, external audit is a separate part, you know why internal audit is helping external auditor to do their job. Maybe A is wrong, right, A is not suitable. But if you ask whether internal auditor can provide assurance on ERP, yes, why not? Then if this is a supermarket, can internal audit undertake surprise visit, mystery shopper, right, to see whether customers are satisfied, shopping experience, yeah, you can do that. C also possible, right. D, right, review company's financial statements, yeah, possible. So, that is why sometimes you may see a gap in the suggested answer, but I think probably you can categorize all three as possible answers, right. Then when it comes to question number 11, again control, see this is the area out of the few controls that I explained to you, if you recall segregation of duties, information processing, right. Out of those categories these are some example, right. Now, question here is application controls. Now, usually application controls can be a manual control, somebody is checking a document, you know PO against GRN manually or PO to GRN is automatically tested, right. Now, here to ensure all transactions are complete and accurate. So, what are the example of application controls? Now, if you go see in other techniques I want to explain to you in my MCQ, sometimes you can eliminate, you know elimination approach, remove unnecessary answers and get into the right answers, right. Now, what are the most obvious application control? Now, password protection is usually totally IT control, right. IT you would have learned IT general control and application controls, right. And backup again comes under IT general control. Now, like 1 and 4 looks odd, then 2 and 3, yeah, they are example for application control. So, then answer is 2 and 3. But for your knowledge, existence check is to ensure that in a control, let us say you want in a customer registration form the NIC to be there. So, there is a check to see whether NIC is entered, and 1-for-1 check-in is, for example, you want to ensure every sale invoice has a delivery note, there is 1-to-1 check-in, those are the example. Then question 12, which two of the following controls in a purchase process could be implemented to reduce the risk of payment of goods not received? Now, this is again I have explained to you, right. In my P2P example, we want to check, right, reduce the risk of payments for the goods not received. Now, remember three-way matching, PO, GRN, invoice. What is that answer? Where is that answer? Right. Now, there are multiple. Now, here there are two answers. We have to pick another point which is relevant, right. Now, this is requisition sequentially number, it is not directly helping us to check this, right. Goods received, GRN is matched with the PO and in. Now, this is a correct answer. So, definitely 2. And what is the other answer, which is goods are agreed to purchase order before purchasing, that is relating to purchasing, right. And another likely answer which goes with 2 is 4, inventory is updated, because after checking if goods are not in the inventory, even GRN control is ineffective. First goods have to be recorded and then you can match it. So, then 2 and 4, and that is the correct answer. Then going to the area of CAAT, what is here? This is not CAAT, CAAT, computer aided audit techniques, right. So, how various, now I have a part in this session, I will talk about digitalization, how various computer programs are used in auditing, But before going there, this is a simple question. Now, there are two computer-aided audit techniques traditionally, we call them test data and audit software, but today we are talking this in terms of artificial intelligence, RPA and so on. That is why I said traditionally we speak about test data and audit software. Right. So, before looking these answers, usually test data is, it's like, very odd thing to do. You can check if you have a calculator, 1, 2 plus 2 is 4, no. So, if you check that and calculator gives right answer, it's like test data. That's a very silly example, but in a bank, you can manually check whether interest calculation is right. So, that's the test data. Audit software is various. Now, for example, ACL, audit command language, is a popular software used around the world. You can use that software for various analysis. Now, out of these answers A to D, we have to answer which of the following best describe test data. So, obviously, test data helps to test. Now, when you say that, you can obviously see matching answer is B, right, because test data where you test the input or the output. So, essentially my example of in a bank you check the interest calculation accuracy, right, with the relevant input is a test data. But other answers are not directly connected, right, because if you look at securing large volume of transaction to increase audit efficiency, this may be analytics, data analytics, right. So, therefore, the proper answer, some question at a glance you can see what is the correct answer and other answers you can eliminate, right. Then if you go to question number 14, this is one example I have already covered in my theory, previous explanation on controls. Which type of controls does a small company, right, I mentioned to you earlier. Now, if you look at a smaller company, they are asking which one is difficult. Now, you remember I mentioned to you in a procurement department, there are about 5 people. One is they are evaluating vendors, one is there is a separate department to raise, separate person to raise a PO, another person to GRN, there are a lot of people. But smaller business, if you run a business, are you going to hire so many people? No. One of the main difficulty for a small business, because segregation of duty need people. So, this is the area small business struggle. So, the answer is A, 1. Then if you look at, I think we have done another section, right. So, those are the controls, internal control, there are a few other questions as well. And now the balance question, if you look at question 15 onwards, they are ethics. So, one of the interesting sessions, and of course, question number 16 relate to digitalization, right. Which of the following is false in respect of digitalization on auditing, right. So, I will take that question separately when I cover digitalization. Then this question number 17 is a definition of external audit. I think there are a mix of question from auditing and ethics. So, especially question number 18, 19, 20, 21, all that question is about code of ethics. So, let me to give you a brief introduction as a background to this question. One framework where you can answer any ethical question. I will spend about 10 minutes, 5 to 10 minutes, and then we will come to answer all these ethics question and any other question in any paper, and then we will look at balance question as well. So, if you look at, remember what you learned in code of ethics. So, I do not discuss much in detail, but few points that really matters, right. This is in your syllabus, ethics and values, right. Now, your syllabus talks not only about ethics, but value. Sometimes these are connected to law, right. When something is in the law, for example, in Sri Lanka there is a bribery law, right. So, if somebody is giving bribe, that is to be discouraged. And then morality is about as an individual doing the right thing, and ethics as a professional, as a chartered accountant, when you become, there are some principles you have to abide by. That is the meaning of this. And then in your syllabus you are supposed to know the importance of ethical behavior, because more than an engineer, right, or maybe a doctor, one can argue chartered accountant has ethical responsibility. Why? So, imagine in a bank or any large organization, if something goes wrong, who gives numbers to shareholders, right? because as chartered accountants, they are in a position, public always trusts. Who are the auditors? They are chartered accountants. So, public interest matters. So, that is one important thing. Then the third point in your syllabus is a conceptual framework. Please write in your book. If you know ethics, you must know conceptual framework. If you do not know that, you do not know ethics, right. Then ethical conflict is about, if your boss, say you are an accountant, your boss is asking you to manipulate a document, right. Do not give this document to auditor. So, then are you going to listen to that? You are in a conflict, how to address it? Then auditors' independence is where auditors are influenced by offering them, giving them job offers and various other matters. And then your syllabus also talks about ethical decision making framework. For example, there is a AAA framework, right. I do not know whether you have covered that, but this is an interesting area of the syllabus. In 2 minutes I covered broadly what is in the syllabus, but I do not spend a lot of time to cover all these topics, but only the conceptual framework I want to draw your attention, then come back to those questions. I mean, one thing that I want to ask you when it comes to ethics, end of the day, this is the most important thing, that is to decide. If I ask you this question, as an individual one can say we are doing very well, I get a lot of money as salaries, you are doing very well compared to your qualification, right. You earn money than a qualified accountant, but when I say you, a person, let us say, but this person is doing lot of unethical activities. So, very soon he will end up being in the jail, but those who are doing the right thing, they are always happy. So, the ethics session is aimed at training and guiding you to do the right thing. So, what is the right thing for chartered accountant? So, I will straight away go to that. So, this is what the right thing for accountants. Again, all these things can you memorize? Very difficult, right. And so, but then I already explained to you, if you learn a subject logically, automatically it is in your mind, right. So, I will take you through this whole thing in about a 10 minutes explanation, then you can answer any ethics question. And so, there are I am sure if you are a Buddhist, there are 5 precepts, and for Catholics there are 10 commandments. But when you are a chartered accountant, you are guided by these principles: integrity, objectivity, competence and due care, confidentiality and behavior. So, I will explain to you that, and then this is the most important one. If you do not know this, you do not know ethics, right. So, there are principles, but there are threats, and then there are safeguards. So, I will quickly do about 10 minutes explanation, right. I will do in 10 minutes and then answer all these questions, right. So, basically the first thing I want to cover is the meaning of these ethical principles, right. So, let me to put it in this way, and I want you to guess some of these things. Now, see, this is a road, and I will ask you what is this road, and there is a name for this road. I will write 2 letters, you can guess that. And whether you are accountant or not, what really matters as every individual should have this. And I would say every individual, if they want to be successful in their life, they have to be honest. An honest person can always be successful and be happy at any time. But this honesty is defined in more powerful manner for accountant, and that is integrity, right? Intellectual honesty. It will never change, and there is no price for that. So, what is integrity? It is all about being honest and straightforward. Now, we can say he is a straightforward man. Now, chartered accountant MD comes to the room and say, look here, we have not achieved the profit, can you make some adjustments and achieve the profit? Accountant is like a god, can create profits. But if you are a straightforward man, you do not care whether it is MD or whoever, you will say, no, I am a chartered accountant, I can't manipulate. I am sure if you are in that place, how are you going to do that? Sometimes you will question me, if I do that, this is MD, I will lose my job, right? But if you are an accountant with this quality, you do not have fear to lose the job. there is another company, right? If you tell that I left my company for this reason, they will take you, because this is priceless when you are a man of integrity. So, what I want you to remember, integrity is about, remember these keywords, it's being straightforward and honest. Now, see, these keywords are very important. If it is a MCQ, if these two words are there, that's the answer, right? So, I write these words, straightforward and honest. Remember those two words. Straight man means, you know, whoever the person, you are always the same, right? The way you deal with, honest, straightforward. Then, if you have these attributes, the other thing that really matters for an accountant is that you have to be, now the difference between you and others is that, why say, when I say you all are still in the process of becoming chartered accountant, but one day, right, you are highly paid as a CFO, finance manager of a company. Why you are paid? Because you are qualified, professional, competence and due care. Do you know the meaning of this? Now, many students read these things, but they really do not know the meaning, right, in detail. Now, what is due care? It is not take care. Due care has a different meaning. Now, professional competence means, as an accountant, right, you have to maintain your professional knowledge, say your knowledge about accounting standard up to date. You can do any job your boss is asking, right. You have to demonstrate your knowledge at a level that helps your bosses in whatever company you work. So, the professional competence is you are qualified and you maintain your knowledge. You achieve your qualification, do not think after qualifying chartered you will stop your study, no, you continue. So, the knowledge. Then due care means what I said is not take care. Any job that you do based on the relevant standards diligently. So, that is due care. So, you have some understanding. This is the difference in you, and when you have that, this is another challenge for you as accountant, right. So, what is that? So, I will put that again. So, you are honest and you are competent, but the problem, although you are competent, you can't be objective sometimes. This is a very important principle. Now, what is objectivity? Objectivity means what, right? Now, let us take a very simple example. The objectivity is, if you look at my previous example, when managing director walks into your room and asking you to manipulate, you know, according to accounting standard due care you can't manipulate, but now you have a pressure because it's your boss. Because of that pressure you are doing the wrong thing. So, I want you to remember 3 keywords, please write in your note, right. When it comes to objectivity, we are checking for this. Are you going to be biased towards anybody? For example, you are auditor, brother-in-law's company, you do not care whether it's brother-in-law, this is wrong, it is wrong, right. So, you will, but the right thing to do is not to audit his company. So, the bias, conflict of interest, right. Now, for example, that brother-in-law is a conflict of interest because you are auditing a company where you have an interest, that is called conflict of interest. You are biased towards your boss, or there is some bias. You are in a tender committee, so you are biased to a application forwarded by your friend. So, bias, conflict of interest, or somebody is pressurizing you, undue influence, pressure. So, those, when that pressure comes, you are not making the right decision, that is objectivity, right. So, then last one, not last, there is one more. So, there is another obvious one if you are a chartered accountant. This is a very easy one, I do not explain this in detail. Confidentiality, you have to protect confidential information, do not release, but the last one that really matters, right. Now, this is your behavior to other, right, how you are exposed to other. Now, imagine as a chartered accountant, somebody is under heavy influence from alcohol and you know, walk in with 4 legs and others will laugh at him. The professional behavior is all about, right, making sure that accountant, they are doing only the legal thing and then they demonstrate, they avoid any act that bring discredit. So, remember the word discredit to the profession, right. So, these are the golden principles. So, I stress you integrity, honest, straightforward. So, competence, you are qualified, you maintain, you achieve and maintain due care following standards. Objectivity means do not allow bias, conflict, any influence to affect your judgment, and then behavior. Do not do anything which bring disreputation. Then what is this road? PI. So the road that I mentioned to you earlier, you are acting for the public, right? Public interest road. Now, if you are working in a bank, you are a CFO, CEO, the accounts given by you, and you are auditor of a bank, opinion given by you is going to be highly trusted by the public, not one person, not your company. So, if this is a road and if you are a wheel, you should be able to freely move, right, but you can't move, there are barriers. So, what are the barriers? Now, these barriers are called SASFI, and many past paper, many question in your exam paper from this area. So, what are the barriers where you will violate this? Very quickly, one is self-interest. Self-interest means, like I said, you as an auditor, you have invested in a company, you have a friendship, you have a connection, all of that, right? Especially when you have a role to play, especially something like an investment, right? So, that becomes self-interest. You own salary and bonus, you are worried that you will not get the bonus if you do not support the managing director. Then this A for advocacy, right. So, what is advocacy? Now, see, as an auditor, when there is an illegal thing, you are promoting. Now, all of this you have to remember keywords, right? Promoting the clients, right, in a manner which is not suitable for an accountant, right. Self-review, it is very similar that you do the exam and mark your paper, right. So, the same example for auditing, you prepare accounts and audit, self-review. Then familiarity. So, familiarity is all about you have a long relationship, therefore, you feel very sorry about the client, right. For example, auditor having audited 10 years, feel very sympathetic about the client. Familiarity. And intimidation is about you are under heavy pressure, right, like managing director is saying if you do not do this, you will lose your job. That is intimidation, and one company is saying if auditor is going to qualify the audit report, we will change the auditor. Now, with that explanation, we can now see, there is one more point I want to add here. We have covered what I want to cover, please write, this is a very important, I am giving you explanation that will cover in your book, maybe if you look at Code of Ethics book, so many pages in one. So, this is called conceptual framework approach to ethics. So, I will mention to you there are 3 things in this approach, 1, 2, 3, right. So, the first one is if you want to comply with ethics, you have to identify the threats. Is there any threats if you are an auditor before auditing, right? Audit partner is auditing his father-in-law's company, there is a big threat. Father-in-law means there is a self-interest as well as familiarity threat, right? And there may be pressures, may be intimidation likewise, and after a threat you have to evaluate, is it significant, is it big or not, evaluate the significance. In my example of auditing father-in-law's company is really significant, right, yes. The last one, what are the solutions, safeguards. So, ethics is all about identifying issues, measuring and giving a safeguard. So, safeguards usually, now see in this case, I mean you can't audit father-in-law's company, you have to remove, I mean you should be removed from the engagement and appoint another partner. So, those we discuss. How you break these barriers, right. Now my diagram is completed, how to break these barriers, these are called safeguards, right. These are called safeguards. So, there are 2 types of safeguards, safeguards created by the Chartered Institute, right. So, that is where you learn Code of Ethics, and mostly what in the exam what matters is safeguards in the work environment. So, what are the famous safeguards? For example, self-review threat, audit firm can they prepare accounts and audit? Yeah, if it is not a listed company, if they want to do any accounting services, accounting is done by one team, right. This is accounting department of the audit firm, auditing is done by the audit team. So, this kind of this is one safeguard. So, like that there are several safeguards that you have learned. So, this will help us in answering the question. So, let us go to the questions relating to ethics. Now, So, if you look at this question, I think question number, I will start from, because we just finished ethics, I will straight away start with that. Question number 18, you are a partner in charge of audit of this company, right, and accountant has left the company. As a result, management requested you to prepare accounts, right. Now, you are auditor preparing accounts, you obviously know what the answer is, right. So, what is the review? It is a self review threat. Then question number 9, now you see how easy if you know the subject, these are, I mean, nothing. Integrity, now this is a tough question for those students who have not properly learned the definition. If you remember 2 words, I wanted you to remember, integrity is about what? Straightforward, honest, you do not need to read anything else, the answer is D, right, for question number 19. Then if you look at question number 20, Rohan is a chartered accountant, he has agreed to request made by chairman to falsify the accounts, right, to increase the profit of his company. Now, what do you think, what is the principle he is going to violate? Is it competence, integrity, objectivity or confidentiality? What do you think? Now, we learn, if you look at previous answer, what is integrity? If you are straightforward and honest, you will never falsify anything. If you do that, you are violating integrity. Answer is A, right, integrity. Then coming to question number 21, you have been the engagement partner. Now, this is a question from auditors independence, a partner for 9 years, a partner for a longer period and now going to be there for the 10th year. Now, as you know, in code of ethics they say, period beyond 7 years, in some guideline it says 5 years. When you serve for longer time, you can't be the audit partner again. So, what is the answer then, right? Now, the question here says, which of the following safeguards to be implemented? Now, remember safeguards, right, because you have served for 9 years and this is the 10th year. So, answers, an independent review partner should be appointed to the audit, right, whether independent partner is there or not, can you serve is the question. No? So, then this may not be the answer. You should resign from being the engagement partner and may serve as the quality review. No, again you are going to engage. So, therefore, this is also not right, right. You should not undertake the audit of that is I mean it may not be commercially viable to stop the audit, but if you take the last one, you should resign from the engagement partner, should not serve, that is the answer D. Then if you look at next question, which of the following must be included in engagement letter? Now, this is a different, now we finish I think ethics questions, yes. We finish ethics question and I will skip 2 questions, I will come back to that. And so, we will answer, I think we will start, before answering this we missed 2 questions, let us answer these 2 and then come back. So, this is on digitalization. I have a quick presentation to you in a little while. So, there also I will explain to you, but for the time being let us see this answer, which of the following is false in respect of impact of digitalization of auditing. Right, the emergence of data analytics and big data has increased the audit risk. Oh, now there are data analytics techniques, big data, do you think is going to increase the audit risk? Is that right? Let us see the balance statement as well. Audit, now this type of question you can't just guess the answer by reading only one, you have to carefully read. Audit data analytics help to test larger sample, that is the correct statement. Right. RPA, robotic process automation, which I will explain to you, routine tasks you can automate, computer will do that. RPA can be used to help efficiency to extract data to be used by auditor, right, probably yes. Then if you look at the last one, robotics can run controls, robots can run controls testing for standardized controls. So, that is also probably yes, when you have robotics you can do that. So, then what is the wrong answer? So, probably A is odd answer, right. How can we say data analytics is going to increase the audit risk, right. If somebody says the increase in use of internet, cyber security, so internet of things can increase the risk, yes, probably yes, but not this. So, A is odd answer. Then if you look at question number 17, which is a fundamental question from audit definition, right. The external auditor provide negative assurance, right, on the true and fair view. Which of the following is the most appropriate definition of external audit, right. Now, see, negative normally external auditor provide reasonable assurance. So, then negative assurance is out, right. External audit is an exercise carried out to give an opinion on the effectiveness of control. No, the opinion on the financials. Third one, identify areas of deficiency. No, quickly you can eliminate those answers. The last one, exercise to give an opinion, correct, D is the correct answer. Then we have answered all these questions. Then if you come to 22, that is engagement letter. Now, as you know, this is the main contract with the company. What is critical to be mentioned in engagement letter is objective and the scope. So, that has to be in the answer, right, objective of the audit. Auditor's responsibility must be mentioned, two also relevant, and management responsibility. Management responsibility is to prepare the accounts, auditor's responsibility is to audit, objective is to give an opinion. Therefore, 1, 3, 4 are the correct answers, right. So, this is the correct answer. Fee also relevant, but if you ask most relevant answers 1, 3, 4. Then question number 23. Now, this question again is a different subject matter, right, because we can't always do a session and come back, because there are a lot of odd questions then and there. Then very quickly we will try to answer these questions. But I will give you some rationale as to why this is the answer, right. Hiru PLC is going to acquire Tharu, another company, right. Hiru is going to acquire Tharu. The management of Tharu intends to obtain a report on. Now, this report is not about financial numbers alone. It says financial risks, prospects and even forecasts. Let us say you are in 2020 now. We are getting financial statements P&L for next 2 years also. Now, that type of assignment is called, please write in your book, this is called due diligence. You do not need to look at other answers, right. So, usually financial due diligence is focusing on financial risk, prospects and forecast, right. So, that especially why this is the answer in a due diligence, whenever, okay, some of you want to know what due diligence means, especially when you want to buy a company, you have to do a study, that study is called due diligence. Those students who know the answer, they can very quickly mark D as the answer, right, because if you do a study in acquiring, that is called due diligence. What is studied is these three. So, question again, now there is auditing part here, 24 is a very important question in auditing, I will come to that. Then this 25 also we can quickly answer, because we did ethics. 25, Sampath is the CFO, he is entitled to a bonus based on the annual profit. Now, you think, now actually now given the current financial situation in Sri Lanka, most companies may not achieve their numbers, right. Now, let us say there is one company, now Sampath is worried if company is not hitting their profit, he will not get his bonus. So, what is the answer? Self-review threat. He is thinking about his side. Because of his bonus, he is going to, he may not do the right thing. So, answer is C, it is a self-interest threat, right. Then question number 26 also we can answer, because I have explained to you the P2P cycle, right. Which of the following would be the most appropriate method of evaluating whether supply is the right supply, right, supply evaluation. One is ask supply to confirm. Now, no point of asking supply whether supply is good, A is out. Ask supply to provide sample of the goods, yeah, but supply will send a good sample, but later we do not know whether balanced good is good. Ask the supply to provide reference from other customer, probably that is a better option. Another customer will tell whether the supply is good. So, C is a suitable answer, right. So, then I think balance question 27 also auditing, 28 auditing, 29, yeah. So, there are these questions, right, almost questions from auditing. I think there is a ethics question here again. So, we will answer that too also and start those auditing questions. What is 32? Advocacy threat. If you remember my explanation earlier, advocacy is all about promoting the client to a level that you forget about your ethics. Now, what is this sentence where the promotion is included here? Accountant was warned about his employment if he does not agree to manipulate the accounting record. See, this is a good question because each of this I can connect to theory. This is what? If you are warned, that is called intimidation threat, that is not advocacy, therefore, it is out. B. Directors requested accountant to perform a comprehensive analysis on the impact of recent tax changes. The accountant does not possess any knowledge. If you do any job without the knowledge, right, so what is that threat? It may be a threat to your, for example, it can be because of self-interest you are doing, right, but it is nothing to do with advocacy, it affects your professional competence. Now, this one bonus we already discussed, that is about self-interest. So, last answer is auditor was asked by a client to represent in negotiating a loan. So, you are promoting the client, the correct answer is D, right. So, then I skip some question. If I go up to the auditing question from where I stopped, that is question number 24. So, we did up to 23, right. So, this part is a very important concept in auditing called financial statement assertion, and I can tell you with my experience of many years of lecturing to the last level of chartered accountancy, last paper, right, under previous syllabus, advanced audit and assurance is the last subject, one of the toughest subject. At an advanced level, we always see even advanced students do not understand what assertion means. I am sure if it is not a surprise to me if I ask you what is assertion, do you really understand? Probably I doubt it, because at advanced level also we see students do not understand this. Therefore, it is very important you understand the financial statement assertion, right. So, then with that we can answer 24 question, and then there are balance questions which are connected to auditing. So, I will give you a quick explanation which can help you to answer most of these questions, right. So, this question is on, let us see all those questions and then we will look at what knowledge we want. So, question number 24 is about assertion, these questions we have answered, and then this question is about, now this is a gem company, you are auditing inventory valuation, which one is the proper approach? This question, the procedure that help auditor to understand the entity, right. So, this is from audit planning. So, how auditor can understand the entity, right, what is the name of that procedure? There are several names, substantive, analytics, I do not know whether you have learned this properly. Now, these are very important techniques of auditing, right, when auditor techniques auditor is using in the auditing process. And 30 question is something about audit evidence, right. Then yes, and this question also we will answer now because it is from ethics. Sorry, we already answered this question, right. Then question number 33 auditing, 35 the benefit of audit planning, right, and this question we discuss test of control, we can answer that easily, 36 on the going concern. Yeah, so up to that, up to question number 36, very quickly I can answer you after giving you a quick explanation.